All righty, I'd like to welcome everyone to the Hurley Investments Market View Commentary for Monday, the 18th of March. I am recording today from an undisclosed area outside of the United States, which I believe is the first time that I've ever done that. I will apologize up front if at any time we lose any audio. I would hope that I would come back relatively quickly there. There will be no guarantee, but that is my hope from where I'm at and what I'm doing. I would tell you where I'm at, but the short answer is at this time, I am unable to. But I will be available for any calls on Thursday if I'm behind on anything, and off we go. So, what I want to talk about today is why I do what I do for work, for my investments, and to try, and there's the key word, try to help others. So I'm going to start off with a couple quick questions. Anyone here believe the stock market is easy? Anyone here believe the stock market is easy? So I see a couple no's, and of course I'm going to have Lance that pushes the envelope, but that's okay, Lance. Lance will tell you at times, and that's probably a fair, honest answer too, to say at times it might be pretty easy. I'll give you that. Oh, I love this answer. Easy to lose money. I think it's very easy to lose money. In fact, if you go back and do your research, you'll find that you really, for all intents and purposes, you really haven't doubled your money if you've sat and held your money from January of 2000 to today. You've got maybe a 90% gain. You have not doubled your money over a 19-year period. In fact, the person that said it's easy to lose your money, he's I might say one of the most honest people I've ever met in all the educations I've done and that I've talked to, because I think the educations that are out there seem to focus more on the pie in the sky, more on the best opportunities, more on the, hey, if it's in a paper trading account and you just don't really give a flying flip, it's easy to make money. Whereas when it's real money, it's a whole new ball game. It is ridiculously harder, and obviously it's not easy. So with that said, I've done a bunch of different things to try to make, I don't know, to try to make this more realistic, more of a, hey, here's how it really is, and here's why I do the things that I do. So the why question is, why do I do what I do for work? Is because past experience has shown me that it isn't easy. Color trading is the best way to invest. And because I can't handle the stress of waiting for it to come back. Now, I'll be honest with you. Some of the best growth in my portfolio was 2006. Primarily the last 2 years of 2000, or excuse me, last 2 years, the last 4 months of 2006. For all intents and purposes, I got lucky. I took some risks that I would never take in real life, that I took in real life. I had an opportunity to get ahead. And I did some spread trading that, even though I was ridiculously successful, it was not a repeatable process. And because it's not a repeatable process, I didn't feel comfortable going into the education side of training for the stock market, because literally I didn't have a repeatable process that other people could follow. Whereas when you collar trade, for me, it's a very repeatable process that, in all honesty, anyone can do, but it takes the time and the effort to be able to do it. And I don't want to say you got to guess right, because that's not true. But part of investing is making your best educated guess, whether it's right or wrong, and being able to live and or justify those decisions that you make. The four part of things. For me and my investments, I need to be able to make something on the way down. And how am I going to say this? Something on the way down. So I feel better. So I'm gonna, kind of weird. So emotionally, I can trade another day, and because it is the best way for me to accumulate significant shares for income strategies and or dividend payments down the road. For me, it also equals growth, but it's a long-term investment. It's not where, you know what it is? It's an investment process that allows me to be wrong, yet still be right. If I'm wrong, I spent a little extra money on protection so my stocks didn't fall. If I'm wrong, I don't make as much to the upside, but I still make money to the upside. Whereas as everyone else is wrong, the risk is in that 40 to 50% of their portfolio. And I'm not okay with being told, you got to wait it out. You got to wait it out. You got to wait for things to come back, because they'll come back. Because they really don't. And they haven't since 2000. The buy and hold hasn't been a profitable system since just past the end of the Vietnam War. And the last part is try. And really this comes to being religious. I believe in karma, that what comes around goes around. And the neat thing is, the more help I've been to people, the more available I've been to people, the more accessible I am that I put stuff out there on the internet, the more new clients I've picked up. And it's pretty interesting to see how karma works. It's pretty interesting to see how at times I've been able to give just the amount of help to keep someone from going off the deep end. And really, it's help that anyone can find on the internet. Anyone can pay the $60,000 or so in educations that I've been through, but some of it is experience. And some of it is literally talking people off the ledge from just throwing their hands in, and for all intents and purposes, guaranteeing themselves the fact that they won't retire in the fashion that they want to. And that's the why, the for, and the try, and what I do. That's important because if you were to ask me right now, I think markets are going to go higher, but I don't like our chart pattern. If I was to look at our chart pattern right now, we're at 25,914. There's a bounce. 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 Could we have a bounce right here and create a triple top scenario going back down? If you look at my chart and the way I have my chart set up, down here on the bottom, we're becoming very close to being on an overbought position for institutions. Yes, it's been overbought at the beginning of the year, but that's for the most part new money being put to work. I do like the big volume day, but obviously that was an options day. I don't see right now, other than possible Golden Cross coming up. I'm not sure I see the upside from here on our markets. If you look at the S&P 500, yes, it's still bullish, but we're almost overbought on the RSI. People could argue with me that the MACD hasn't quite crossed over. I could argue with them if I shortened it out, it would be bullish. I'd give the Dow bullish, and obviously if I went to the NASDAQ, I would also tell you we're bullish. You could argue with me on the MACD, but we are to that overbought range on the RSI. In fact, what I really don't like as I look at our chart, that's the Dow though. As I look at our chart on the S&P 500, right now we are roughly just above that 2,800. We finished just above 2,816. So we're like 16 points higher, sitting at a pivot point, knowing we're running into the end of March, where you usually will start to see some selling in portfolios for taxes that are due in April. So I've had a 0% return, because even if we shoot up and test the 2891s, at the end of the month, I think we'll come back down and settle right around 2,800 for tax season. I don't see the stimulus that's going to move us higher in the near future, at least through March, which means I probably need to go work on getting some covered calls in place. And I'm a little frustrated with Disney, in all honesty. If I was to bring up a Disney chart, one of my core holdings that should be going higher tanked. Can't get above 115. And I've told myself, I should add short calls at 115. And I can't pull the trigger to do so because when I was first going to do it, when I was first saying, you know what, I got to pull that trigger, I got to do it, the sucker went up to 115.80 intraday and then finished down below and I felt like a schmuck. Came down and bounced off of the pivot point. All right, 115, I got to do it. But it finished high that day. Then in 2 days, bounced off the pivot point, and I felt like a schmuck again. Guess what I'm going to say right now? I'm just schmuckalicious because there it is bouncing off of the 50-day and your pivot point sitting at 112.60. If you look at the chart, it even gives you a doji, which means it probably should be heading back up here in the near future. Why the heck, after a Captain Marvel, after the fact that they got Frozen coming up and Captain Marvel will most likely be at least $1.5 billion movie. The Avengers Endgame Part 2 is coming out here. Why this sucker just won't get up to 120, I have no idea. But as I do my research, and yesterday I said, oh, of course. '20th Century Fox and Disney announced distribution adjustment multiple in connection with acquisition and the effect on outstanding shares. Disney is being diluted as it takes 21st Century Fox off the market and replaces it with Disney shares. It's not a dilution to the stock market, but it is a dilution to those that hold Disney. So the question I got, well, why didn't you sell out of Disney? So out of curiosity, could anyone tell me why would I not sell out of Disney? Why would I not choose to sell out of Disney? Give me a thought process. Why would I choose not to sell out of Disney? Anyone? There you go. Yeah, that's exactly right. I'm going to go ahead and I'm going to make a quick comment there and say I would not sell out of Disney, and you're close, but it's not really the cost basis. Last year on Disney, I had the opportunity to sell out of Disney and buy back in at 115, and we took some good profits from Disney. Some people in Disney as low as $26, but we had the opportunity to do that. But that is not the reason. Why would I choose not to sell out of Disney? Anyone? If you don't know, type a question mark or two in. Why would I choose not to sell out of Disney? There you go. Yes, it is a taxable event. but I really wouldn't have to pay any taxes because I'd end up selling it at a loss, and that's your key. I'd sell it at a loss. The wash sale rule. There you go. It's the wash sale rule. Good job, Lance. If I sold out at a loss, I'd have to wait 31 days to get back in. And believe it or not, I'm not going to think I'm lucky enough to outguess the market and say that Disney won't be trading lower 31 days down the road. Part of collar trading is you never miss an up day in the market. Part of collar trading is you never miss a down day in the market. But those up days and down days can be really good. Either one, especially if you've got some protection in place. So Disney was down. Disney was down because it's been it had some dilution today. Doesn't mean I'm going to get out of it, but it means even though I say the markets are going to end higher this week, my belief is still that the S&P will have a flat March 2019. Earnings won't move the market. I don't see big movement in earnings coming up. I would tell you, I don't see economic reports moving the market. The FOMC rate decision on Wednesday could be an issue, but they're not expected to do anything. They're expected to go on hold. Nothing here moves the market. There's nothing internationally that stands out. So just like I told you last week, I might do some short-term stock positions only or as short-term spread trades. And it's just really pushing things to get me through April-ish, because earnings might be the next catalyst that moves us higher. Earnings estimates have been brought down so low with the government stoppage and so forth that plain and simply estimates are low enough that maybe everyone, even though it's artificial, everyone should be able to beat their numbers going into the next quarter. So there'll be an artificial bump as earnings come in higher than expected after they've been lowered. I put in here for you the Disney announcement, 21st Century Fox. I put in here Boeing and how can you buy it. I do have a Boeing 380, 385, I believe, April bull call. Out of the money. It is losing money, but only cost me $600 for 3 contracts. I might dollar cost average a little bit to make it a little bit cheaper. But a very interesting, technically sound article on Boeing and where you can buy it. It will be one down the road here that I am looking at some long-term leap long calls to take advantage of Boeing's distressed prices right now. I also have a little something about Apple. People have been telling me I can't believe Apple's going back up. And my answer might be I can't believe it went down so much. Obviously, a product that people thought was dead won't move the needle, and the Apple iWatch has been doing significantly better than expected. In which case, I would expect it to be another part of Apple that, in all honesty, keeps knocking it out of the park. Maybe not to the point that I see its services sector, but it should do really, really well. With that said, I am kind of cutting it a little short, but I do expect everyone here to attend tomorrow night at 6 o'clock Mountain Standard Time. You'll have the trade findings and adjustments. We've had a pretty good run so far, but let me get questions answered for you. What questions do you guys have? How do you see financials perspective? So how do I see financials? And the short answer is they didn't move last year when they should have with the rate hikes. So they are a lagging sector of the S&P 500 since 2008, since last year when they should have really taken off. So if you ask me, I think financials should have their breakout year. I think that now that people have gotten over the worry from last year, the scare for economic growth, and no one's going bankrupt, no one's going out of business. Although I did hear Twitter was sued for $250 million, which is kind of funny because you really can't sue a company for allowing other people the freedom of speech. Rather interesting, but the short answer is they should be taking off. The financials should really be taking off since, other than JP Morgan, they have not kept up with the market, yet there have been every reason to do pretty well. I am in Bank of America. I am in Zions Bank. I really like Bank of America and Zions Bank because they haven't come anywhere close to their all-time highs. I like Bank of America because it's cheap and because you can play it with leaps that cost you $1, $1.50, or only $2 for allowing yourself, 2 years out in time for them to finally take off. So I think financials is a great sector to be invested in that still has its move coming sometime in the future. Great question, Abraham. And Lance, what financials do I like the best? It's tough because it seems like when I want to go to something else like a Morgan Stanley or a Citi, something pops up that tanks them. I would not be investing in Wells Fargo. Goldman Sachs is a little too expensive for me. So again, my favorites are probably going to be something along the lines of Zions Bank, a regional that I know and I understand. I also like Bank of America because it's relatively cheap, and there's no reason Bank of America can't get up to 35, trading at 29.5-ish right now. So those would be my two favorites from the research I've done through Christmas to tell me which ones are still fundamentally sound and which ones have good upside potential. Are there any other questions you guys have that I can answer for you? I brought up why I do what I do and so forth because I seem to have got a lot of questions about that. In April, I'm going to come up more of an education side to Hurley Investments. For those that have money with me or some of my longtime favorites, you will be in. Don't have to worry about being charged anything. Anyone I manage money for, you're in. But I'm going to try to do the best I can to give other people the opportunity to see what's happening and that there is a different way to trade in the market or be invested in the market, especially with the downside risk that I see in the near future. I really do think that you could see a pretty significant drop in our stock market as we finally have one of these market crashes that we're about 6 years overdue for. Quick question. What is your target price for Boeing Leaps January 2020? I'd probably try to go out to even a 21 if you could. But obviously right now on Boeing, it has not found a bottom. I'd feel closer to Boeing at a bottom at 360. If you read the article, it could go down to 330. But if I was to go out to something on Boeing, I'd be a January 21. My expectation is going to at least bounce up to 400 again. So I'd be a little cheap here. And I'd be looking to a January 21 400 for 42.25. There's no reason why I can't go and test its highs closer to 440. And that's why I'd be choosing a 400. It's out of the money. It's cheap. I would be legging in where for my portfolio, if I had a couple $100,000 in, I might only do 1 or 2 contracts, give me the opportunity for 1 or 2 times to be able to dollar cost average if I needed to. So that's where I would be right there. An interesting comment just came through. Kevin, it sounds like you're contradicting yourself. Are you protected to the downside? And the short answer is not yet. If you look at the charts are still telling you that for the most part, things are going up. So no, I am not protected. I've got positions right now that are just stock positions. I look really smart on a Visa. I maybe don't look so smart on a Disney. If you are in Visa, you'll notice most likely some long calls that can be added to Visa. But am I protected to the downside right now? The answer is no. I'm still following the upward movement on our chart. And so I'm close to being ready to put some positions on. But the chart still tells me, at least in the short term, we can go a little bit higher. Are we hitting that possible triple top? Maybe. But I'm really close to putting some extra position on for what I'm going to call tax selling, as people sell out of mutual funds and so forth and at the end of March for taxes that are due on April 15th. Good question. And am I answering that one correctly? Were you able to understand it? Perfect. All right. Are there any other questions? If not, I want to thank you for being here tonight. You guys have a wonderful evening. And we will go from there. With that said, Maud, I am back, so to speak, stateside. So I will try to make sure I give you a call on Thursday. And I'll go over with what we have to do. A little bit foolish, but most brokers are. So look forward to me talking to you on Thursday. And Thursday early evening, if that's okay. Perfect. You guys have a wonderful evening. I appreciate spending this time with you. Don't hesitate if you think there's something that I need to be doing a little bit differently, or make a comment. Kevin, think of doing this, think of doing that. Let me know. You guys all have my information. You find these on myhurleyinvestment.com. I've got them posted. And obviously, you've got my blog site. You can email me at khurley@hurleyinvestments.com, or customer service. It'll get to me. Look forward to working with you guys here in the near future and making sure this becomes a little more educational to help everyone out. I appreciate your time. Have a good evening, and I look forward to talking to most of you hopefully tomorrow night on the trade findings and adjustments. Good night.